I'm Alfred Ritter, CEO, managing partner of Montgomery Securities. We're a old name but a new firm in investment banking. We're located in San Francisco. We're a digital investment bank. We're utilizing technology to make investment banking more efficient. Um, my guest today is Pierre Lavaux of SGH Capital. Uh, we're gonna just so the audience knows, we'll do it. We'll do the be interview style. Pierre and I will have a conversation for the next 30 or so minutes. We'll open it up to some questions and then we'll wrap it up. Feel free to put questions into the chat, and we will respond to them at the end of towards the end of the webinar. So Pierre, why don't you give a little introduction to yourself, let the audience know, and we'll get started there.
Super. Well, thanks for having me, Alfred. It's a shame we have to do this remotely, but I'm still pleased nonetheless. So I'm Pierre. I joined SGH Capital 3 years ago. I was not trained to be an investor. It just sort of became a happy accident. My skills were in software development at first, and then I met some of the partners of the fund who had been investing actively in software companies and felt like a good addition to the team might be a software guy. And so that's how I joined, looking at software projects and technology platforms at the end of 2017. And something like, I would say, a year and a half-ish later, we started to see the wave of blockchain projects with the ICO craze, etc. And this is where I sort of started a deep dive in fintech, and this is how we got to know you and to create the relationship. HGH itself is an early stage investment firm. We started as, I would say, super angel investors because we were very comfortable investing in the first, I would say, month of a project. Even if it's just two guys in a garage building a prototype, it makes us excited. This is when we like to engage. We usually don't lead rounds. We don't price the rounds. So we like a friendly investor that is quite accommodating. We make quick investment decisions, and we do seed, Series A, and sometimes Series B. But like it's the whole spectrum nowadays. So like a seed can be anything from 50 to 500K, and we're happy in that medium. Since I would say the end of 2019, we've been investing more actively in the blockchain space with an investment theory that is quite simple, really. We feel like we're still in the middle of a gold rush, and during a gold rush, you should be investing in the peaks and troughs. So we've been looking systematically at all the blockchain infrastructure projects and investing in those fields.
Great. No, I appreciate that. Thanks for the background. So you were a software developer. So
Yeah.
That's your background. So you just started kind of analyzing some of the things that they were working on or looking at SGH, and then that relationship built from there, and you became a venture investor.
Yeah. Like I've been I think coding websites since I was 14 years old, and it was nothing fancy in the beginning, but eventually you sort of get to like it, and you look into new tools. And I would say I was fortunate in that I was just getting in that space just before cloud technology became a thing. And so I was just onboarded on this new generation of developer tools that were so efficient and quite easy to utilize. And when the fund wanted to look at a developer tool, I could easily see how something could be like a secret weapon or a key advantage when those companies have to make a decision whether they should build it or buy it off the shelf.
Got it. Great. No, I think it's always interesting to see how people come to where they're at. I mean, I'm in investment banking, but I started off as an entrepreneur running tea houses in Southern California. So, our paths are all different and interesting.
Do you miss it sometimes?
What's that?
Do you miss it sometimes?
Never actually. I mean, operating specialty retail, I'm so happy, especially my wife and I often say, "Oh, thank God we're not in that business anymore," especially recently because it's just been so tough on retail. So anyhow, so SGH Capital fund manager, right? And tell me a little bit about the firm, right? You're a pretty lean, small firm, and
Yeah,
you're headquartered in. So I always get confused. You're headquartered in Luxembourg, but
yeah.
you're in
So
Paris. So explain
so
that
it's
to the
funny.
folks. I know it's some sort of a regulatory element, but maybe explain
Yeah.
it to people who aren't really necessarily familiar with European funds and the like.
So it's funny because we were a distributed team before it was a thing. We have been investing remotely before COVID was a thing. And so the fund has its HQ in Luxembourg. We have our own regulated fund manager in Luxembourg with a back office that is mostly dealing with legal numbers, regulation, reporting, etc.
Okay.
But the investment team, like the partners that are actually looking at the investment and engaging with those companies, um, they are in different parts of the world. And so at some point, we had people in the Middle East, along with Silicon Valley and France. And at this stage, most of us are based in Paris because we can't travel. But so the heart of the firm is in Luxembourg. The funds themselves are mainly based in Luxembourg, even though we now have one fund which is based in the States. And it's a global operation, but it's a small team.
Got it. We'll get into the funds themselves later. But how are you sourcing kind of deals as a European fund manager? I mean, are you investing primarily in European deals? Did it start that way? Kind of what was, I mean, I know you're investing in things all over the world, but I think that's one thing is kind of how did that develop? And then how do you get access to deals in the US, being that you're in Paris?
So the fund started with a couple of early stage investment in the States. When Alex, one of my partners, started the fund, the first investment came through his network in Silicon Valley because back then he was based in the States. And this is how everything started. This is
Okay.
the foundation of the network was in the States. So this is why we have a strong connection to the States. And to us, investing in Silicon Valley technologies was really an edge to differentiate us from other European managers. And so we've been actively investing in the States. And when we could, we would travel on a routine basis to the States. We almost had a rotation of people with at least one full-time partner in the States. Now, in today's world, it's a little different. And sadly, we have to do a lot more of video calls and Zoom. But that also has enabled us to invest in different parts of the world because it's more acceptable to do deals remotely now.
Yeah.
And so we've been looking at deals in Asia in addition, because sometimes we would meet Asian founders when they were at the growth stage and moving to the States for expansion. And we felt like it was a shame because had we been in Asia before, we could have created this relationship earlier. So,
Right.
so this is part of the rationale. And the mix of investments, it's a I would say a healthy ratio. Check size in Europe tends to be a little larger. I don't know if there is an explanation to that. Maybe it's just because we felt more confident because we were closer to the companies.
I mean,
But
check
in
size
terms
that
of
you're writing, investments you're writing into the
yeah,
companies. Yeah.
yeah,
Okay.
but I would say the portfolio nowadays is basically 2/3 USA and 1/3 Europe and the rest of the world. So we're still heavily invested in the States.
And the fund wasn't necessarily, or the funds were not necessarily investing in blockchain only early
No,
on,
yeah.
more general software, um, but
Well,
other things as well, right? It
yeah.
seemed like pretty diverse. At some point though, it seemed like there was a narrowing of the focus. I mean, that's my perception. What was the catalyst for that narrowing? Was there anything specifically that happened, or just saw the opportunity, or was you joining the firm and you said we got to invest in blockchain and
I think it's a couple of things that converged. On the one hand, we had a portfolio that was very diverse in terms of like verticals invested.
yeah,
We have a dry cleaning company, we had biotech companies, we have robotics, etc. And I think after a few years of investing, we realized that some verticals were, I would say, more venture friendly than others, and they could be more capital efficient. And software and fintech are one of those. And so I think the narrowing started at this point because we sort of matured in the way we selected the deals. I probably had an influence as well because I like investing in software companies, and basically fintech is software applied to finance. So that's quite cool. And then there was also the introduction of our blockchain and fintech fund, which has a specific investment thesis in that space. So like the existing.
Well, why don't we talk about that and go ahead and talk about that investment thesis, kind of roll into the next kind of part.
So the existing funds, they were agnostic, I would say. And when we look at the investment verticals over time, you can see it really fluctuated. And we set up a blockchain and fintech fund that is entirely dedicated to that space. Because we realized that when we started this fund at the end of 2019, there was only like a subgroup of our investors that really had, I would say, enough conviction in blockchain as a broad theme and something strategic that would be like a long-term opportunity. And so we felt that we could syndicate a smaller group of our investor base that was really convinced about that opportunity and dedicate our energy to investing in that space. And so because we had been looking at so many deals, we felt that blockchain could have a lot of applications in like modern finance, for capital markets, for securities, for all of that. And so it would probably be in a regulated environment. And so very early on, we sort of decided that we needed to level up our understanding of the regulatory environment and the regulatory framework, because it was not about what the SEC felt about tokens or anything. It was about like the deeper implications. If you want this to be an industry standard, what needs to be done, what needs to change, and then as a startup company, how do you time it correctly so that you don't have to wait like 2 to 3 years to have regulatory permissions to actually put something on the market. And so this is how we felt that we could identify companies that had the right timing to market and the right like regulatory compliance so that they could operate in the near future.
So, I mean, we talked earlier, you're investing primarily seed, Series A, kind of earlier stages. But you've done some later stage things, as everybody does, right? Mix it up. And so question, are you just making venture capital investments, right? You're investing in stocks of companies, equity ownership in companies, or have you, or did you maybe in previous funds invest in, I don't know, protocols, cryptocurrency, utility tokens, digital securities, any of those more exotic, I guess, assets?
So like I would say the core of the investment has been equity investments in early stage companies. So it's not listed stock, it's not large cap or anything, but we have as like a hedge of some sorts made some investments in cryptocurrency. And we haven't yet invested in protocols, even though we are working on sort of a DeFi pocket, because we now feel that there is enough, like we feel that the community that is building on DeFi is now large enough to justify the investment. I would say that maybe a year and a half ago, it was a little too cyberpunk, too fringy, and it was tough for us to really like get a sense that it was a sound investment. But now that we can see that there is so much connectivity between those projects and that you can really come up with new financial products, this is something we will be investing in the near future. And then on an opportunistic basis, we have sometimes done pre-IPO rounds in companies that came through our network. Mostly investors we've worked with in the past that said, hey, look, I have an allocation. I think it would be a great addition to your portfolio. And if we agree, sometimes we join in with a small check.
And is there any kind of part of the sector? I mean, you mentioned the DeFi that you see allocations growing there. I mean, is that the sector I would say that you're most excited about, or emerging kind of trend in terms of your investment thesis, like considering?
Well, what I find fascinating about DeFi is that if you look at the news over the past few weeks, you realize that the large institutional investors are finally catching up with stuff like Bitcoin. Like
Hmm.
when someone like Fidelity says we're going to file for a Bitcoin ETF, it makes you realize that 2 years ago, smaller asset managers already tried to do it. And so I think that DeFi is so far out for them that it's going to be like the new blockchain lab for the foreseeable future. And I don't see them engaging in DeFi in the next year or so because they have too much catching up to do. So I think it's going to be like we're going to see so much experimentation in DeFi that it is tough not to be excited about it. But like, would I say this is my favorite topic right now? I don't know. Like, it's like picking your favorite children. It's tough because I would say as investors, we have this intellectual curiosity and we look at so much stuff every day.
Well, I only have one child, so it's easy to pick my favorite. um, all right. Well, let's talk a little bit about. I mean, we mentioned investment products, or we mentioned the investment manager, and then we've talked a little bit about funds. But talk to us a little bit more about the specifics in relationships. Like, I mean, maybe talk a little bit about number of funds, maybe quantitatively understand how many funds you've done or had or do have, and then talk a little bit about I would say just quantitatively talk about the funds and in aggregate is fine,
Yeah.
but however you want to tackle that, just so people understand a little bit.
Yeah. So we manage 4 funds. Two of them are early stage funds that have been active since 2014, 2015, if I'm correct.
Mm-hmm.
One of them is a growth fund that we manage jointly with another asset manager that is focused on growth opportunities.
Okay.
And the fourth one is this blockchain fintech fund, which we manage ourselves. I would say in total, that's roughly 120 companies invested. So it's slightly above what you can see on a website like Crunchbase. But the assets under management, I would say are around 100 million USD.
Okay.
So it's still a pretty small operation.
Yeah. No, that's great. If it's big enough and not too big, right? I think that's a good size. And who traditionally has your LP base been from? I mean, is it family offices? Is it, I mean, I'm sure like as businesses start off, it's friends and family first, right?
Mm-hmm.
It's your own money, friends and family, people
Yeah.
and then you kind of move away from that. But at some point in time, I'm assuming there's, some LP family office types that have come in and kind of added the AUM there and kind of helped scale up. So just
Yeah.
just kind of talk to me a little bit about that and who that investor base is and who the target is.
So I think we are probably one of the few like VC investors in Europe that has no institutional investors invested for now. And that is due to how we started out and the history of the firm that has always been a very entrepreneurial firm.
Mm-hmm.
So the LP base now, it's mostly former entrepreneurs and a number of family offices. We don't have like banks, endowments yet, and probably because we're still a little young and a little small for that. And so we have a pretty close relationship with the investor base because we have like those personal connections to them. And so we have mostly investors from Western Europe, but lately we've been able to diversify this investor base a little, and we're making it a little more global.
Great. And any specific investment that you're, I don't know, most proud of? You mentioned you've done over 100, 120. Any one that that you, I don't know, either most proud of or learned the most from? Not
I
necessarily the
think,
same one.
yeah. Well, let's just say that for all of the investments in the blockchain space, we've had to learn a lot, because when we were looking at opportunities in crypto, initially you had so many people building so much stuff. You needed to come up with a sort of mental framework to pick the good ones, and in that framework you had to like level up your understanding of regulation, and then level up your understanding of protocols, and then you still had to do the normal due diligence that you usually do when you invest in an early stage company. Like, do I trust these people, and do I see enough ambition and grit to really build this in a successful and large company? Because like when you invest in the first few months or first few years of a company, you're investing, and it sounds corny, and everyone say so, but you're investing in a team. And so this part of the due diligence, even if it's a blockchain company, it is still important. So I think the blockchain investments are probably some of the investments where we had to do the most thinking, because of like this space is just so new. So those are always very excited. When we close a blockchain deal, I think there is like an extra 10-15% satisfaction because we got it to the finish line. Whereas when we close a normal software deal, it's like, we've
Just
done
another
this
software deal.
Yeah.
So, we mentioned regulation, and regulations kind of, people, and you're primarily dealing in fintech as a investor, but you are, how are you, I guess the question is, how are you regulated, right? Because in the US, we've got, investment advisors and SEC, and you're registered, but there's exemptions, and the same is true in Europe, but the audience may be a little less familiar with it. Maybe you want to just give a little insight on that, and if you can draw a parallel to what it would be like in the US, then that's helpful. Maybe helpful
Yeah.
if you can do that.
Well, so in Europe, VC funds are usually considered alternative investment funds, and so you have a specific regulation for those investment funds, and you're supposed to be working only with sophisticated investors, which are pretty much like qualified investors in the States. Even though sometimes like the criteria are a little different, but you do have exemptions as well. And so like the most, I would say, obvious one is the so-called sub-threshold exemption, meaning that if you manage less than 100 million or 500 million, you're not subject to the same reporting requirements. And so in our case, we do like regular reporting, but it's not as extensive as it would be if we were managing like more money than we are right now. So we're not exempt from regulation. We're not exempt from registration. I think it is just like it gets more exhaustive as you grow in size.
As you get larger.
Yeah, and I would say that securities law in Europe is it's kind of securities law in the States. Europe is a collection of countries. It's not a single country. And so we do have MiFID and MiFIR for all the trading of listed securities, but we still have nuances when it comes to investing locally in unlisted companies. If you invest in a French startup, it's not the same as if you invest in an English startup, even though you do have sensible stuff that is common between the countries.
Sure.
So regulation plays an important part when we look at deals that are, I would say, on the bleeding edge. If you look at, for instance, an investment we made in France in a company called CoinHouse, I would probably credit CoinHouse for a large part of all the regulatory framework in France when it comes to cryptocurrencies and digital assets, because they lobbied the government really hard for clear guidance. And eventually the government did so, and CoinHouse was the first licensed digital asset services provider in France. And one of the reasons we invested in that company is because we felt that they were capable of getting this lobbying to the finish line.
So thanks for that information about kind of how you're regulated, and then turning it towards regulation in Europe, which obviously, as you mentioned, like our states, have different regulations on the state level, on the country level, Germany versus France versus Spain, and I guess England no more because they're not part of the EU anymore. So,
We miss them.
yeah, well, that's okay. They'll probably come back. Anyhow, so how have you seen the kind of the attitude from European regulators and towards digital assets, digital asset securities in primarily in Europe, and then how does that compare to one of the SEC and the US? So if you can give a little insight on that, that would be from your perspective, that'd be great.
Yeah. So digital securities in Europe are a bit of a challenge because ESMA, the European regulator, doesn't really want to change the existing body of regulation to make it obvious that they can be electronic. And so you have a bunch of states that are pushing for, at the very least, sandboxes so that they could demonstrate that it would be a useful addition. And so when we see what happens in the States, and especially when we had this wave of utility tokens that were trying to not be securities, but eventually were securities, etc., we are in the same situation here. You cannot avoid securities law because if you're transacting something that eventually is going to appreciate in value, it's probably for investment, so they're going to say it's a security. And so I would say in many ways it's quite similar, but in the States, like the SEC takes a clear stance, they issue guidance, and you get clarity through enforcement. In Europe, it's not as much the case. So I would say that the States are probably one of the better jurisdictions because at least you know what you cannot do.
Okay, well, that's helpful. I mean, obviously this is highly regulated and it's not going to be unregulated, right? I mean, I don't think there's any regulator in the world that's going to say, oh, well, because it's digital, we'll just let you do whatever you want, right? You still have to adhere to the same rules, and they're agnostic as to the technology. I mean, it's not.
Yeah.
It's about investor protections and disclosure and all of the things. So that's. I mean, we see that here, right? We've been doing. In the we're in the securities business, regardless of whether it's written on a piece of paper and stuffed in some CFO's office, right, in some drawer, or it's and it's on a paper certificate, or it's on a blockchain and you use a third party to administer it. Like that's kind of the spectrum. So we're kind of agnostic as to the underlying technology, and we really are more looking at, I guess, a good investment's a good investment is a good investment is kind of where I come from. So
yeah, and I would add that in Europe, one of the challenges if we really want digital securities to become an actual thing is going to be the MTF regulation for multilateral trading facilities, because the existing regulation assumes that you have a number of trusted third parties throughout the life cycle of that transaction. But those third parties, they're not relevant anymore if you're using smart contracts because everything is being executed seamlessly. And so at some point, we're going to need either an addition to the law that creates a sort of new regime for automated trading of blockchain-based securities, or they're going to have to update the existing body of law so that you do not need those third parties. Because as of now, I think the only way to really play by the book is to recreate those intermediaries with a bunch of manual confirmations, which doesn't make it that efficient.
Kind of defeats the purpose, right?
Yeah.
But I think there's a transition period that gets you from where we are, right, to build the roads to the bridges to the future, right, into where now the regulators have confidence in the underlying technology, so they know it's not going to be hacked, and investors aren't going to lose all their investment because somebody in, I don't know, North Korea, I'll pick on North Korea because they it's easier.
They've been in the news a few times.
Hopefully I don't offend anybody by using North Korea as my example, but whatever, some rogue state or rogue player in somewhere taking all your digital tokens, secure assets, whatever, that are kind of bearer instruments, and there's no way to get them back. Well, that's a problem, right? That's not going to fly. So, I mean, anyhow, we don't need to get into too much on that, but I agree, right? That's what the regulators are there for, and we're also regulated, right? We work with FINRA and in the SEC, so we've got to report to them, or at least I do. And the so prediction. Let's move on. Just kind of like prediction themes, trends, things you see in the industry. You know, I mean, we mentioned a little bit about security tokens, digital securities. I know, there's other funds that have tokenized, and I I shy away from the word token because I don't think it is a good word. I think it implies not value. It doesn't imply value. It implies
Yeah.
something disposable you use to get on the metro or or play a video game. At least I did when I was a kid. So, but it's kind of, where's your position on let's say the security tokens, digital securities? Do you invest in them? In terms of the fund, have you issued a digital security, thinking about it, might do it? I kind of know the answer to that, but you can let me know where you guys are at.
Yeah. So, like your belief about the ball token is something I share because it feels a little, gamey and finicky. And so when we set up this blockchain and fintech fund, we also introduced in the provisions of this fund and in the legal documents the ability for us as managers to eventually digitize/tokenize it when we feel that the infrastructure is ready.
Okay.
And we think, we think it's for the benefit of the investors, in that when you invest in a VC fund, you usually invest for 7 to 10 years. And it's a highly illiquid investment, but it doesn't mean that it should be, because a fund that is doing a decent job could be distributing cash flows throughout the life of the fund, and potentially you as an investor would like to sell some or all of your investment in that fund. And so I hope that eventually we get to a point where there is enough regulatory clarity and enough, I would say, high quality infrastructure so that we can create this environment where investors can sort of manage their exposure in the fund. Because what is true for our fund as a VC fund is probably true for many other illiquid asset classes. And you could dream of a future where you can have like granular control over your portfolio, and you could every so often manage your allocation across different vehicles.
So you could
So
actively trade your alternative
yeah,
investment portfolio.
yeah. So this is something I feel very strongly about. Eventually, I hope we will get to that point. And then when it comes to us investing in tokens, well, to be fair, there aren't that many securities token available in the market. Everyone is talking about it, but you don't have that many. The good news is when you look at countries like Luxembourg, they have made it officially possible to issue your stock on the blockchain. So
Okay.
in the past, it was possible to use a digital ledger to basically be your register,
Like a Carta type of
yeah.
system.
But it was sort of like a transition period. And now it is officially feasible to do the primary issues. So you could basically incorporate a company, and from the start, all the stock of this company lives on the blockchain. So this is a really welcome addition. It is. I don't believe it is yet possible for funds, at least not end to end and from the get go. But I trust that top tier financial centers will get on the train and make it possible.
Yeah, I mean, I think that's a good. I mean, that's actually, it's one thing that I appreciate is the a bit to put in. I mean, basically, what is a digital security? Well, it's an uncertificated share. We've had
Yeah.
there's a provision that most companies have, that they can issue uncertificated shares, right? That they're not issuing a physical. I mean, I don't know anybody who issues a physical certificate anymore. So I think having that provision in any early stage company, having that provision in their whatever their operating agreement, bylaws, whatever type of organization they are, that they can have that, so that they have the option to convert it to a digital share, or a blockchain, use a blockchain
Yeah.
ledger to record those shares and to manage those shares. I think that's a prudent thing to do right now. And I actually advise companies to do just that. So you guys figured it out on your own, so that's good. I'm glad to hear that.
Yeah, and I would say that at least one of the really positive things that came out of the ICO craziness is this idea that when you get tokens that are basically stock option, they should vest over time, and that you could, by using tokens, come up with an elegant system where you have a transparent, predictable vesting mechanism. And if you're like an early employee in a startup, you know exactly how much stock you own, and you can also get a sense of how much that stock is worth. It's always a little messy when you get ISAs or stock options, because it's quite opaque, and it's really well, for the longest time it was paper and Excel based. Now thankfully we have solutions like Carta, but it is still not fully, I would say it's not optimal yet.
Yeah, I agree. I mean, I think if you look at the pain in the the pre-IPO venture secondaries market, right? I my proposition is that more so for later stage companies, because I feel like early stage companies, there's really you're not going to want to trade those early on, because I mean, there's no significant increase
Yeah.
in value at that point. So I think it's a little less important. Plus, you have Rule 144 and a Reg D. If you're doing a Reg D, and you got certain restrictions on when you can sell and who you can sell to and different things, right? So
and for the early employees, you have Rule 701 in addition to that. So I mean, just recently we've been looking at the possibility to buy some shares from an early employee in a great company, and it seems that it's a profitable job for the lawyers, but it's a hell of a journey for the employee that wants to cash out some of his shares.
Yeah, it's thousands of dollars that you have to pay, and 45 days or something like that. I don't know what the actual timeline is, 30 to 60 days, to get through the process with, navigating ROFRs, and all of the rights and privilege, just trying to get through it, and they're restricted shares, so then transferring restricted shares. So it gets expensive and time consuming pretty quickly. My dream is that we can make that a much more efficient process by using blockchain technology and digital securities, and that's kind of where that's my vision and what I'm seeing as a possibility there.
And when people feel that innovation is not going fast enough, or at least adoption is not going fast enough, like, just look around you and notice how much people started using DocuSign these past few years.
Yeah.
Previously, you would print
or
stuff
Zoom
out.
for that matter, right?
Yeah, and eventually you embrace it. It becomes the new normal, and then it becomes acceptable to move on to the next step of digitization. So maybe the next step after DocuSign is to just agree to receive tokens and put them in a wallet.
Yeah, and I think that I mean, there's a lot of funds and sponsors who in the alternative world who require wet signature, right?
Yeah.
And
we don't
can't use DocuSign, right?
Yeah.
So that's changing, though. I see that changing dramatically and rapidly, and I think that's the overall. I think it's an evolution, not a revolution, in my opinion, and we'll get there. But it'll take way longer than anybody thinks. But then we'll wake up one day and it'll all have changed and be like, oh wow, that was so fast. So where do you see? So the question in terms of secondary trading, right? We mentioned that a minute ago, and we're kind of bumping up here on time, but let's get into that real quick. Where do you see that coming from? Like, I mean, there aren't really any market makers in the space yet. It's just too early, and they'll come. Is that kind of your position, or where do you see that potential secondary, those secondary markets. I mean, I know you're investing in Archax, so
Yeah.
and I know Graham, and I did a webinar with him as well. Where do you see that coming from? That secondary trading liquidity for secondary trading?
Well, I think it really depends on the products that we can actually tokenize and digitize. Because if the issuers are actually institutional issuers, they're probably going to bring some of their own institutional clients. But if the issuers are smaller companies, then we're gonna have a liquidity problem in that there's not going to be a deep liquidity pool. So what makes me quite excited about a project like Archax is that they can digitize a bunch of different stuff. You could issue bonds on the blockchain, and you could easily do secondaries on that, or you could issue notes, etc. So because you have so much flexibility, I think it's up to the issuers really. And market makers, I'm always a little cautious because I don't think we will necessarily need them. Okay. I can see their usefulness in many cases, but I don't know if if it's sort of an insider's market, you don't necessarily need the market makers.
And I guess depending on block sizes and ability to trade over multiple ATSs, I mean, maybe that could be a programmatic approach to selling, right, and buying, and those would essentially become the market makers without needing market makers themselves.
Yeah, and we've seen different efforts by exchanges to build common liquidity pools, and so. In a way, it's very likely that the market makers are going to have to embrace technology even more, and maybe provide their own liquidity pools to really be relevant.
Interesting. Yeah. I've got a couple of questions coming in from the audience, so let me get to those. I've got advice to new protocols looking to raise seed funding from venture capital funds like yourselves. Any advice for new protocols looking to raise seed funding?
So I will say make it approachable, and don't necessarily get in like the thick of the science already, because it can be a little overwhelming. You have to be able to explain it in quite simple terms. And once you hooked us up, I think we will love to just do a deep dive with you and see how smart it is. I'm always a little cautious when I see people that are building protocols and they're trying to make it sound super smart and super complex. But I think if you want like mass adoption, you shouldn't expect your audience to have a PhD or to be like super smart with applied mathematics backgrounds, etc. And when we see stuff like prediction markets, etc., and they're using fancy statistics and the pitch is basically equations, it's tough for us to not come as a little standoffish, because we're not necessarily talking about a vision. We're more talking about like a piece of code. So make it approachable. And pitch it like you would pitch a company.
Yeah, and I think focus on the value proposition and the benefits that you're going to derive. Yeah. That's where you start. Start at the top and work your way down. The last thing you probably want to talk about is the underlying technology and how it actually functions. That's a question for, or that's a conversation for a second conversation, not the first conversation.
Yeah, right? Pitch it like you would pitch a company. And it can be tough, but it's a really great exercise.
And then there's another question. Any tips on not having VC funds steal your software? I'm not sure. I mean, I think that's probably coming from, VC funds notoriously don't want to sign a non-disclosure agreement, right? And so how do you take them, how do you protect it from them not stealing your code or I mean, you don't give them your code, but you pitch the idea, I'll let you answer. So go ahead.
I mean, the like the main reason VC firms don't want to get into NDAs is because it would make their life in reviewing opportunities much tougher. Because then they would have to potentially say no to other companies in your space, even though they're not going to be exchanging any information. So, like you have to see the position of the VC. It would create massive liabilities if they entered in NDAs. So
I mean, does a VC? But as a VC, do you actually? You don't have a copy of their code, do you?
It is very, very rare that we are provided with a copy of the code. I have in one instance been offered to have a look at the
Yeah,
code.
I mean, looking at it's one thing, but
infrastructure.
that they would transfer the code to you would be.
No,
I don't think any VC. I wouldn't do
no.
it. I mean, so that's how you stop them from stealing your software.
I mean,
you don't give them the code.
I mean, in one instance, I did like a 1-day deep dive with the CDO of a company, and he showed me how they worked, because it was like a really fancy piece of software, and I wanted to see it work in action. And so I got to see the stuff in action, and I got to see how they developed it and how they designed the infrastructure. But it was basically eyes only, and there was no way for me to walk away with a copy of the code. But like, I think any VC that would behave like that, they would shoot themselves in the foot.
Yeah, I mean, that's the other thing is only work with trusted, VCs with some sort of background that So I think that's the other thing is know who you're dealing with, and if you're not certain who they are, that you don't, then just as they are going to do their due diligence on you, you need to do your due diligence on them to make sure that they're, if it's Andreessen Horowitz, I don't think you have too much to worry about. But if it's some
but it's a good point. I think that in many cases, the founders of early stage companies, because they're in a rush to get capital to build and to accelerate growth, they don't necessarily take the time to do their research on the investors they're talking to. Mm-hmm. And I don't think this is too complicated, because you can easily find some of the companies they invested in, probably through your network. You can place a reference code as well.
Exactly.
You're getting in a long-term relationship with them, so just take a minute to do that.
Yeah, I mean, having been the recipient of capital from an investor in a previous business, I think the qualitative elements of that investor are probably more important than the quantitative, that the amount of money they're investing or that they're investing, right? I think those are, especially for an early stage company, picking the wrong investor is a death knell to the company, right? There doesn't share in the same value.
It can be a disaster, because sometimes you have investors that want to be very controlling, but like, you're either part of the management of the company or you're not. So I think it's quite important, especially in the early stages, when you're at this transition between the friends and family and slightly larger checks. You want to make sure that, like, it's a bit of a joke, but you don't want to be welcoming an angel investor that is basically looking for a new job. This is something to avoid.
So there was a question about really about central bank digital currencies. I don't know if you have a viewpoint on central bank digital currencies, in that they may replace Bitcoin or other cryptocurrencies. I mean,
I think it's a fascinating topic, especially when you see that the Treasury Department can print so much money.
There's still fiat, whether they're on a blockchain or not.
But like, it's going to be a little more obvious if it's on the blockchain, because you're going to see like a record of everything that happened. But so I think that before we can fully wrap our heads about all the stuff we can do with central bank digital currencies, it is fascinating to see how much usage of stable coins has accelerated. Last year, I think, was the year of stable coins. Like, the USDC volume went just through the roof. And I know that some of the businesses we're invested in, they actually use it to transact with partners for cross-border payments and such. So my main concern is that if you look at what China is doing with its own CBDC, that it would sort of exacerbate some of the behavioral aspects of those governments, and I don't necessarily think that an electronic money that is printed by the government and that allows them to sort of control them and get the taxes paid in a more efficient way is going to be something that, the general public is going to like. I can see the efficiencies for themselves, but they kind of have to strike a balance. And it's a much more complex discussion than when governments in like the Nordic countries said, we're going to get rid of the cash and we're going to do everything with credit cards. Because they were not changing the money. They were just using the way you transacted.
They were just not printing anymore.
Yeah. But if you say that now everything is electronic and abstract and the government controls it, it's going to be tricky. So
that's why I'm going to buy junk silver. Do you know what junk silver is? It's like the silver coin, pre-65 silver coins. I have a stash of those in the locked in a safe somewhere at an undisclosed location.
What I think could be really relevant is when someone like the IMF has to come up with solutions to send money to governments or
like
to
Bank of International Settlements or somebody at that level.
Yeah, I think for them it would make a lot of sense.
Well, I mean, I think that, there needs to be some. So if you look at settlement, right, and the settlement and the ability, if one side is a digital security here and the other side is fiat currency that's non-digital, it's going through the banking rails, you have an inefficiency there that needs to be solved for.
Yeah.
And I think whether it's a stable coin, because with the volatility in Bitcoin, you don't necessarily want to go into Bitcoin or even Ethereum, right? I mean, even though it's pretty quick, at least Ethereum's pretty quick, Bitcoin less so. But I mean, certainly quicker than a bank transfer. So I think that's kind of the area potentially that a central bank digital currency could help with, is the settlement side. So we're not settling. We don't have to settle through the traditional banking rails. And then the promise of T0 is actually possible. So I think that's my viewpoint, just to throw in my own opinion there.
But it's funny because like the more people talk about stable coins and faster settlement across borders, etc., the more it seems to me that some banks are actually trying to be a little better at what they do. Because just last week we had a transfer from the States to Europe on the SWIFT network, and it settled in a matter of hours, and so it was good enough. And I could not help but wonder, are they trying to do their very best now to convince us that we don't need a stable coin? Maybe they are.
maybe, and maybe they'll, I mean, I think they'll also listen. I think banks will realize if they need to, and they need to have a faster system, they'll move, Swift, or will adopt a blockchain standard and be able to move it faster. If it is indeed faster, that remains to be seen. I mean, I think it can be faster, but I think there's, credit card, transactions go through pretty quick. So like, Visa processes more, more transactions per second than probably the Bitcoin network does. So anyhow, but let's not go off into that. So I think that's kind of the questions I have for today. I would like to, one, I want to thank you, but I also want to give you an opportunity if there's any passion project, any group that you're involved in that you wanted to give a shout out for and talk a few seconds about, so people kind of know about that. So go ahead.
Well, there is one thing that is close to my heart is a group based in the UK, but that operates globally, which is called Founders Pledge, and it's a nonprofit that helps founders, but also investors, to reinvest some of their money and proceeds in impactful cause. And so it's a systematic approach to philanthropy, with a research team that once a year picks a topic, does a deep dive. I think last year it was everything about carbon. They've done stuff about clean water, clean air, access to medicine. And they also organize a bunch of very relevant events about the state of the world. And last time I was with them, we actually had an exercise to simulate how the world would behave in a pandemic. And it was actually Johns Hopkins University that was organizing the session. And we were split up in different groups.
Was this prior to?
It was prior to COVID.
Okay.
And they said, and it was basically a call for the nation, because they said that we need to invest more in research and in, I would say, readiness. And so they are really a great team of people. And I have personally pledged to donate part of my own carried interest to this nonprofit. But like, anyone can do it. If you're a founder of a company, you can sign the founder pledge, and it's a commitment that will only be active once you actually exit and cash out some of that money.
Right.
But from the moment you sign up, you are part of this group of like-minded people that have access to great research, and it's really I think a good way to do good. Great,
that's fantastic. Well, again, Pierre, thank you very much. If anybody in the audience wants to get a hold of you, do you have a, I don't know, Twitter handle or the SGH website, and any place they can reach out to you?
I think you go to the SGH Capital website, and on the Teams page, you have my profile with links to my LinkedIn and my Twitter account. And if you want to email me, it's my initials at sghcapital.com. I answer all emails, especially if you have an interesting project. And we're happy to create more connections.
Great. Then finally, I want to just appreciate the audience for questions, for attending, and hopefully enjoying our conversation here. If you need to reach out to me, my email is alfred.ritter@gomonty.com. And you can find me on you can also go to the Montgomery Securities. It's Montgomery-Securities or gomonty.com. Either one reaches me. So yeah, great talking to you, Pierre. I really appreciate it. All my best to
Thanks
Alex.
for having me. Yeah.
And we'll talk again soon. So thank you, but thank you very much for participating.
You're welcome. Thanks for having me, and thanks everyone for tuning in.
Okay, awesome. Bye now. Thanks, everybody.
Bye for now.